Good morning, Wall Street winners. It is Monday, September the 1st. And if you can remember back to the 90s, there was a band out of Toronto, Canada called the Barenaked Ladies. And the Barenaked Ladies had a very famous single called If I Had $1 Million. And if you had $1 million, if you came into $1 million or $1,000 or $10,000, the amount is immaterial to this conversation. So the question is, how would I invest that? And the answer to that question is I would take 10% of whatever amount I had, and every month for 10 months, I would buy into one of these ETFs. I would buy into something like the QQQ, the Invesco QQQ Trust. This is an ETF that gets you access to a ton of tech stocks, but in a more balanced type of portfolio with a very low expense ratio. If you see the expense ratio down here at the bottom right, it's 0.2%, and it gives you a 0.5% or 0.5% dividend yield. The reason I would buy into it over a 10-month period is the price of this is going to fluctuate up and down based upon market movements, and that will allow you to dollar cost average into this. If you're more aggressive in your investment approach, you could buy into it over a shorter amount of time, but you are risking buying in at higher price points as opposed to lower price points. But you are also eliminating some potential gains over the 10-month period by delaying those purchases. That would be one of the ETFs I purchase. The other would be the Vanguard Information Technology Index Fund. And then a third would be an ETF that represents the S&P 500. So I would split my money between those three, and I would buy in over an extended period of time and then just let that money sit there and grow over time until you actually need it. And when you need it, I would sell off a portion of each individual fund, so that you're reducing your exposure in each one to fund whatever it is that you need at that time and free up that cash flow. Hope this helps you. Good luck in your trades this week. And if you like the videos, hit the like and subscribe button.